Okay, we're ready to go. I'll admit everybody now.
Okay.
Three, ready.
Okay. Good afternoon, everyone. Sorry for the delay. It was completely my fault. I apologize to everyone. My name is Stephen Abernathy, and I, along with my co-host Matthew Daly, will be your host today. Let me welcome you to the Abernathy Group Family Office's June 2025 First Friday meeting. And as always, in this meeting, we're going to focus our discussion on the process of creating a wish list. This was a question that several people had asked over time, and we'll discuss what a wish list is, why it makes sense to create a wish list, when it makes sense to create a wish list, and finally, how to build one over time, because it's pretty easy and it's really incredibly helpful. So this, as I said, this topic surfaced over the last 4 months several times, and we've been showing you that over that time period that most public markets are priced for perfection. Speculation is abundant and it's almost everywhere. I mean, we can go over many different variables. It's just everywhere. And and as everyone knows, policy is changing in Washington rapidly. So historically, as we said last month, this combination of events has created a recipe for trouble at best, and at worst, it may be. Uh, I guess I'm worried that the worst may be yet to come because it forces a significant repricing of assets lower, as the earnings expected are quite likely to fall short of the narrative changes from speculative trading based on the market that's always quickly bouncing off, small declines. And I guess you would say that, the future remains uncertain. And I think the future remains much more risky than we thought. Again, as we said last month, this is one of the main reasons we all have such a large position in 4 and 5% US Treasuries. We want to have access to safe assets when prices become investable, and the 4 and 5% or more return we're receiving on our safe assets, it's a reasonable return to expect without any risk. So today, our prepared comments are going to be recorded, as other families who can't attend have asked us for the recording, and our comments today will be approximately 30 minutes long, leaving plenty of time to answer questions from everyone on the call. If questions do arise on the content from today's presentation, please either send your questions along by typing your question in the chat box at the bottom of your screen, or write it down and raise your hand. We're watching that icon at the bottom, and at the end of the prepared remarks, we'll grab you by clicking on, if you click on that icon at the bottom of the screen. So our intent was always to make this monthly presentation into a town hall type of meeting, because we realized the topics discussed may create related questions, and at times, they create unrelated questions. The primary intent, as we said, of this meeting is to ensure everyone's questions are answered with sufficient data while avoiding bias most analysts on Wall Street they just sort of endemically have. As you know, we don't sell any products of any type, and we have no incentives other than to help each family make intelligent decisions. So we want to encourage you to send us your questions, as it's likely that others may have the same or related questions. Presentation a bit more fun. One final note, please remember to mute your devices, microphone, and stay on mute unless you have a question, as the background noise is difficult, or it makes it difficult to hear and it's distracting. Okay, let's see here. So with that said, Matt, did you want to add anything on any of these slides, the beginning slide here, or you want me just to jump into it? I think you're on mute.
Apologies. Yes, let's go through the topics.
Okay. All right. So the topics we plan to cover today, one short note, there are topics, if there are topics that you thought might be covered in the wish list creation, don't forget to to raise your hand and ask the questions. The main goal of today's meeting is going to be to discuss the essence of one of what I think is one of the most valuable tools in the investment process. It's called, they call it many names, and yet we're just going to call it the wish list. So, what exactly is a wish list? And this is sort of Warren Buffett's configuration of how he goes about life. So, why does anybody need a wish list? Isn't it possible to create and deploy an investment portfolio that's intelligently allocated without a wish list? Um, yes, it is, but it's less reliable. You know, if I'm successful in convincing you about the reason even the most successful investors in the world need and use a wish list, um, we're going to discuss um, the properties of this. We're going to discuss when you need a wish list. We're going to, and when a wish list comes in handy. Finally, we're going to discuss the correct and the easiest way to build a wish list. So, what's a wish list? It's a list that, similar to any other or many other lists in life, that you depend on in life. It's a list that's slightly different in that it cites the assets you want to acquire or would like to acquire if you had the chance to acquire them at a reasonable price. The one caveat is that for this list, one of the unarguable variables is that the assets you include on the list should have, and in many cases must have, enduring value. So this is not a speculative list. This is sort of a long-term enduring value list. Um, the list should include not, or should not include rather, flash in the pan assets or fashionable trendy assets. Think about Warren Buffett sitting at his desk making a list of the companies that he wants to buy when they become valuable or when they become price sensitive and interesting. So again, it's a long-term asset, or it's a subset of long-term assets you think your family will enjoy for decades. This might mean it takes a bit more thoughtfulness and a discussion with category experts about the assets. So don't don't disconsider an asset if you aren't an expert in that area, but do consider having an expert or a category expert help you with some of the variables that surround the asset. So the idea behind the wish list is to create this list when it you know when it, when you're in a calm environment. It's not recommended to create a wish list when there's chaos around, when you're mad or upset about something, including the stock market's results for the day, or when a family situation is front and center. We've discussed many times the emotions are often the enemy of intelligent decision making. So the summary is that creating a wish list is most productive when you're calm and you have the ability to think clearly and consider what the future has in store for you and your family. One useful tip is that a wish list can almost include any type of investment you might consider. We've helped families create significant wish lists in real estate, retail, in commercial real estate, in certain stocks and bonds, of course. And I've seen wish lists that even include collectibles. Yet that is significantly outside of our expertise. We're not Bitcoin people, and we certainly don't understand the collectible markets. So, in summary, a wish list is a written summary of the lists of assets you want to own if they were priced at levels you define as being able to deliver value for your family over the long term. So this brings us to the next logical question. Why does anyone need a wish list? The first order reason is that it encourages you to actually create a list defining the assets you really want to and plan to own when the prices are attractive. This forcing you to commit this kind of information to writing is incredibly helpful. Creating the list tends to infer more than a passing thought. It's more of a commitment, as I said. It makes you think long and hard about the decision. The second order effect is the reason that it forces you to calmly, yet with reflection, look into the future and build some scenarios that are realistic and even likely. This type of planning is incredibly helpful and has been the source of wealth building for many. As you know, I'm always a fan of including the thought process of what happens if I'm wrong in the analysis. So as positive as it is to look into the future when it's rosy, it's equally helpful to remember that you always need to have a plan B or a plan to make lemonade from lemons if the future doesn't unfold as you thought when you put the original list together. So what happens if I'm wrong question is always the last question that you should, or it's a question that you should have answered before you put the list away. Another significantly valid reason to build a wish list is because actually going through the process, it encourages intelligent investing, rather than spur of the moment speculation based on what someone told you or what you heard on TV or read online today. Again, the model that you should adhere to is sort of think about buying a real estate property, either retail or commercial. You're probably going to own this asset for 20 plus years. This is the type of thinking that is pivotal when building a wish list. So next up is when you pull out the wish list and either edit the wish list by adding to it or deleting something because the world has truly changed. Keep in mind that as life changes, your wish list changes. Matt, let me take a second to check with you to find out. I know that's really long-winded, and I just wanted to check and find out whether anybody has comments or questions or just wants to get moving.
No comments or questions so far.
Got it. Okay, so let's take a minute and find out. Well, let's just move to slide 6. This is good. So when does an investor need a wish list? Of course, the first instance which comes to mind is when the asset categories are overvalued. That's an easy call, and paying the prices current owners are asking during these kinds of scenarios mean that owning the asset had most or all of the future value pulled forward, and the seller is realizing the next 5 to 10 years of appreciation in the current asking price. That's not a welcoming environment. So a wish list comes in handy then. In this situation, the wish list acts as a governor or a discipline machine. It reminds you that when you were calm and collected, you valued the specific asset, and that was a fair value when you were at peace with the world. So paying more than your estimate at the time that you created the list, it's unwise. So unless the information set describing the asset's value has changed, you shouldn't change your wish list. The next time you find a wish list helpful is shortly after a tumultuous downturn in the stock market or bond market or real estate market. The wish list reminds you again that when calm and collected, you believed a specific asset class would deliver above average value in the future. You also believed that the asset will survive turmoil and either deliver significant or increasing cash flow or appreciation, or both. And the fact that the asset is within your buying level or your price range, you need to act, or you need to have a good reason not to act. So this period of decision is often incredibly difficult, as it looks like the world is going to end. However, these are the points in time where the most intelligent investments are made, and these are the points where the most significant gains are made. This really is sort of one of the most important reasons for having the wish list. Think of the creation of everything digital as the internet was born. Everybody on this call remembers the late 1990s and the early 2000s. It was clear to every investor that the future would develop in a more connected way and productivity would increase on a global scale. And that's happened. It took a while, but it's happened. Those investors who created a wish list in the late 1990s, here's the problem. During 1995 to 2000, those who created a wish list had to wait through years of gut-wrenching increases in the prices of their chosen wish list candidates. You know, they increased almost these candidates increased in price almost daily, yet were always too expensive to create a future in which you can envision a profit outside of just abject speculation. Yet, as always, intelligence overcame speculation, and those companies selling at 100 times estimated earnings declined eventually to 15 times earnings, dealing the speculators significant losses and delivering those with a wish list a smorgasbord of incredibly attractive companies who would create the bedrock of the future for the corporate world as we know it today. And listen, there's hundreds of examples we could go over, but one that everyone remembers, and it's just a good example, is Amazon. Those pressing enough to calmly think about the efficiency of online shopping, and shopping for more than books. Don't forget, the first couple of years they were just focused on selling books. If you thought about the efficiency of online shopping with the breadth of goods and services that would eventually become available online, and if you included it on your wish list, you had several opportunities to buy this company at a bargain. And why do I say that? It's because Amazon, on its way to being the king of retailing, lost over 90% of its value at least 3 times during the last 25 years. So on the one hand, yeah, speculators may have benefited a little bit, but I doubt it. And it's only for those who planned and had the staying power to realize the value of such an enormous value creation. So, in summary, an investor needs a wish list when asset values are much too rich to allow you to purchase the asset and receive what you would be better and reasonably acceptable, which you think is going to be a reasonably acceptable return. And a wish list is also needed when the world is in decline and it reminds you about the assets you wanted to own for the long term, yet we're we're much too expensive, and they just wouldn't deliver a realistic return. So we will clearly admit that implementing a wish list during periods of significant economic uncertainty or change is difficult, and during geopolitical turmoil, the stakes could seem magnified by 10 times. Yet this is exactly when the value of sitting down and creating a wish list can come in handy. It allows you to remember what you were thinking when you were calm and when you were at ease. It tends to help you make intelligent decisions in, without emotion during incredibly difficult periods. So before I walk into how we create a wish list and give a couple of examples, Matt, I want to check in with you. Anything to add or comments?
Yes. So, first of all, real estate is interesting to me. You mentioned that would be interesting to expand upon it. But in terms of wish list, what do you mean by that? Because I think maybe people are wondering, is that what we like, what we're interested in investing in versus what is the most advantageous thing for us to, look at, if that makes
So
sense.
yeah, it does. And the example I think it's most useful is to think about Warren Buffett or to think about a real estate investment. If you're going to buy a a sort of a corporate property or a commercial piece of real estate, you're going to you're going to make a significant investment, and it's going to be sort of a 10 to 30-year investment. So the wish list should consist of either that retail house that you saw on the corner that you've always wanted to own and wanted to live there. It could mean a subset of 10 or 15 companies that you think are incredibly valuable companies in the technology space. Um, let's talk about the seven horses that are pulling this market in every direction that it seems to want to go. These are all incredibly overpriced properties, but they're really high quality businesses. So I would think that most people would have a listing of these seven companies as part of their wish list. You just want to buy them at half the price. So does that help a little bit?
It does, yeah.
So okay, so let's get on to the point of how um, we create a wish list real quickly, and then I want to give a really thoughtful example. Um, how does one create a wish list? This is the difficult part, and this is the fun part at the same time. So our advice is to start with the concept of owning an asset that's going to be needed and used forever. Of course, life changes and you can change also. Yet you must believe that this product or service is going to be in demand for a long time. Think about Warren Buffett's portfolio of Coke. Think about Warren Buffett's portfolio of utilities. Think about the railroads that he owns. Think about the energy assets that he owns. All of those, I think, might qualify as boring, but boring may very well be better with good balance sheets and with enduring products. These are things that you need to live. So there's another concept that many forget. The assets you include in your list, as I just said, they must have strong balance sheets and they must pay a dividend. That last statement is really, really important. You must be able to collect a dividend. And why is this important? Because over time, as you wait for your value to compound, you should be collecting part of your value in the company that it's creating. The value of this concept has several dimensions. So first, only high quality companies are able to pay dividends. Only highly profitable and highly stable companies are able to pay dividends. Owning high quality, stable companies is important when you're making a real investment. So, not a speculative in trade, a real investment. So, think about real estate investing for a second. It's just as we discuss. Would you purchase a property that was so over leveraged, or it was over leveraged to a point that there was no cash flow available to pay a dividend? That's the question. Would you buy real estate without any renters or without any dividends or any rental income? I think that most people would say no. So the bottom line is great balance sheets, management teams with a history or culture of navigating change, and don't forget to ask yourself what happens if you're wrong about the future. So let's stop right there and let me give you an example or two of what I think will be. Let me just give you at least one example because we have just a little bit of time left. About 2 weeks ago, we created a list just for our own personal wish list in an area that we suspect has tremendous upside based on artificial intelligence or the compounding effects of artificial intelligence. It happened to be in the biotechnology space. This is a space, or this is a sector that has been underperforming for 10 years in a row. In fact, I would say it's been underperforming for so long, I would classify it as neglected. And with good reason. There are a lot of companies there that are actually losing money. However, when you look a little bit below or you look into the balance sheet, you'll find, and we put together a list of 10 biotechnology companies each with over $100 million in revenues, meaning companies are using their products and they're receiving value. So there's confirmation bias or confirmation period that these are real companies. And each of these 10 companies is selling for less than the cash value on their balance sheets. So for instance, one of our favorites is Ginkgo Bioworks. It has cash of $562 million. And at the time we made the list, it was selling for $331 million. Just as an example, it is not an advertisement for Ginkgo Bioworks or any of these companies. In this instance, we've decided, or we're working on building sort of a portfolio effect of these are essentially public companies that are trading at a third of the price of private companies, and they have hundreds of millions of dollars in revenue. These are real companies, and I think the important point is that they're all going to benefit tremendously from the leverage of artificial intelligence. So this is the type of instance where a wish list comes in handy. This is a wish list of 10 or 12 companies, all under cash value, all with significant revenue, all losing money. So that's it reminds me of private equity, but selling under cash with that amount of revenue and um, the I guess the benefits of artificial intelligence coming down the road seem very interesting to me. Just as an example, Matt, let me stop here and find out whether anybody has any comments or questions, or if you want to go over another example, we can do. Just depends. We're getting a little bit long though.
Yeah, okay. We'll move it along, but there's no comments or questions so far. Just I think it is an important point though, that the cash values exceeding what you're talking about, and the progression that's coming forward through AI is tremendous, and especially with quantum computing coming up. Um, it's almost limitless. And
Yeah, agreed. Yeah, cybersecurity is another industry that will be propelled forward by AI. The CAD CAM business, which every real estate company in the world, every corporate company in the world uses to build almost everything with. Um, and the video game world is another instance of companies that are young, but they're going to be the leverage that AI gives these companies with programming. You can find some companies that are they're almost all too expensive for typical thoughtful investors, but having them on a wish list when they stump their toe, and they'll all stump their toe at some point, or the market will find gravity at some point. Um, it's coming. So that was what I wanted to say. So let's take this moment and thank everybody for coming. I think it's come too long that we don't want to worry about what the market is missing here. Although I will tell you that if you have a chance to read the papers that will come out tomorrow, some of the numbers on employment are a bit frightening, and this bill that we have, again, I'm not trying to be political in any way, shape, or form, but this bill that we have in front of our electorate is planning to be um, it plans to overspend as much as the former administration was doing. So again, we're not trying to be political, we're not trying to take a side, but we are trying to say that we're in a difficult position as a sovereign nation, and it appears that we aren't taking care of our first principles. We're not living thoughtfully. We're spending more than we make, and this just can't happen. Every one of you on this call has built a business, and you know this. Yet we think it's okay, and it just isn't okay. There needs to find a again. I don't want to get on a soapbox here, but we need to find a solution. I don't know what it is yet, but we need to find one. So, Matt, anything else geopolitically that's on your radar screen?
um, no, just there's a lot going on, but a little bit worrying. Globally, there's just so much potential conflict going on. Hopefully, we'll avoid all of that. But domestically, I think there's maybe a point of contrition. Hopefully, we'll figure it out. But I think it's a lot of semantics. But at the end of the day, we'll see.
Yeah, it's true. Okay, so um, for anybody on the call that has some more questions or wants to delve into a couple of our wish lists or wants some examples, please call. Let me know. In the meanwhile, um, I received some valuable counsel from one of our families recently who said, "Hey, Steve, you ought to fix these footnotes and get the video posted in a meaningful time period, meaning quickly." I got his message. He's a good guy and he's smart, and he told me to fix these things. So I'm going to get this thing. I'll get this sort of posted as fast as possible and send the footnotes out, which is almost always, I think, better reading than our verbal navigation here. So God bless everyone. Thanks for tuning in, and we'll see you next month.